Right. Still have a lot of people attempting to join, so I'll be accepting people as time goes on. But if you're here, you should count yourself lucky and privileged. Let's get right into it. So what are we going to be learning about? We're going to be learning about the basics of Forex trading. Then we're going to understand the structure of the Forex market. Remember, this is likely to be a 2-day session since we can't absolutely cover literally everything in trading in just one session. When I say absolutely everything, I'm talking about beginner section, especially the mere fact that I have absolute beginners. And then to think also about the fact that we'll be able to run the technical analysis aspects. The technical analysis in trading can be very daunting and then sometimes very complex. So we might have to break down this session into two. And how to make money trading Forex, we're going to learn about that as well. And how to read Forex codes, something that is very confusing and can be confusing for a lot of beginners. And trading platforms and setups. I already let you guys download the MetaTrader platform. So I know most of you don't know your way around it, and probably serious ones might have gone on YouTube to do their own basic research about how to navigate the um, MetaTrader platform. But obviously, some people definitely also be reluctant and then waiting for me. So I'd run you through it as well. Yeah, like I said, we'll go through some technical analysis and how to just make your own analysis as a trader. So let's talk about the basics of Forex trading, right? Remember, guys, Forex basically stands for foreign exchange, right? So Forex is just a short abbreviation that is coined to literally replace the word foreign exchange, right? Because it's almost like so long to just say, I trade a foreign exchange market. So it's like it's easy for traders and then institutions and financial operators to just say we trade a forex market, right? Basically replacing the foreign exchange market. It says what? Forex or foreign exchange market is the world's biggest trading market where buying and selling of currencies take place with the help of traders, brokers, banks, individuals, and other financial institutions. So that's like the most basic definition that you can get about trading, right? It's what's the world's biggest trading market, right? When it says the world biggest, then it tells you that there are other markets as well. That's why it's classifying Forex as the world's biggest. I don't think a lot of people really know and understand when we say Forex market is the biggest, but especially for people that have no idea what Forex trading is about, right? You're welcome to one of the biggest, in fact, not even one of the biggest, the world's biggest, like the slides rightly says, financial market globally, not in Africa, not in Ghana, not in Nigeria, the whole world, right? And I'll show you some comparative graphs, and then you know how intense it is when we say that the forex market is the biggest market, right? And then before you get involved in with the forex market, you need an intermediary, which happens to be a broker, a bank, or any other platforms that allows you or connects you, right? What makes Forex interesting is that it is a 24-hour market, right? So for the purpose of you guys communicating a little bit among yourself, I'll allow it, but hopefully nobody spams the group chat or nobody sends any external link. If you do that, I'm gonna remove you and then I'm gonna close the group chat again. Yeah, so the Forex market, right, is what a 24-hour market. 24-hour is what makes trading interesting. What does it really mean when we say Forex is a 24-hour market, right? I explain it to you. In trading, as traders, right, I'm going to use GMT as a reference, Greenwich Meridian Time, because I'm obviously from Ghana, right? So if you're from Ghana, or Nigeria, then you count 1 hour ahead. In Ghana, 9 p.m. on Sunday, right? 9 p.m., right? Let me just annotate that here. In Ghana, 9 p.m. on Sunday, right? The Forex market opens and then it trades 24 hours. When you say 24 hours, it means that from Sunday it's open, no closing, right? No, like you go and try and trade and then it tells you that okay, market is closed, wait for the next 8 hours. No. Sunday is opened, Monday is opened, Tuesday is opened, Wednesday is open, Thursday, Friday, and it counts across, right? 24 hours within all of these days. All through to Friday, right? Friday, again Friday at what? At 9 p.m. GMT. So it means that for traders, we only have Saturday and some part of Sunday to just not be active on the market. Apart from that, every other day we can actually trade, and we do actually trade. In fact, if I'll be very fair with you, even for Saturdays and Sundays in the platform that we use to trade, some crypto instruments are active and available for traders to trade. So even though we say that the market is closed on Sundays, I mean Fridays or on weekends, for people that are avid crypto traders, they have the opportunity to trade that, right? Some people are complaining about the volume. Let me just quickly see if it's come from my end and I'll just adjust it. If not, then they should probably check from their end. Let me see. Okay, this should be loud enough. This should be loud enough. Right. So I hope you're following that the forex market is a 24-hour market. It starts trading from Sunday 9 p.m. all through to Friday 9 p.m., right? Let's talk about the basics of forex market, right? It is the most profitable and advantageous market than the stock market, shares, equity, and other securities market. And when we say profitable, it's actually profitable because the forex market is actually one of the places that allows us as traders to maximize our opportunities in what we call leverage, right? So you're going to understand leverage too. In the stock market, in the what's the name, bond market, and even the commodities market, not a lot of people are or not a lot of traders are actually allowed to leverage heavily in the market. Like if the term leverage is new to you, just write it down in your own note. I'm going to explain it, right? So because those people are not allowed to capitalize or maximize on leverage, they're not able to take immense opportunities when it comes to trading. But as traders, we are always allowed to use leverage ranging from 1 is to 100, 1 is to 500, 1 is to 1,000, 2,000, sometimes as much as 1 is to unlimited, right? Leverage is one of the most powerful tools that allow traders to be very profitable. So Forex is a very profitable market and advantageous to trade than any of the other market. So it includes trading currencies all over the world, mainly divided into major and minor currencies. So I get a lot of people really asking me that can I trade a Ghana cedis? What do you guys trade on the forex market? Can I trade Naira? Can I trade a Rand? No. These are minor currencies, or sometimes we even call them exotic currencies, right? Minor or exotic currencies. But in trading, in the speculative market, we trade the majors, right? The majors instruments relate mainly to the G10 instrument, right? So if you don't know G10, you can Google G10 countries, and then you're going to see the list of countries. Just Google capital G and 10. Just write in your Google G10 countries, and you're going to see the countries that constitute the G10. And then their currencies are the most traded on the currency market, right? So in the next slide, I think it should show you. Okay, the next slide is showing us a comparison of the forex market versus the other markets that we have globally, right? So if you watch here, look at this data has changed over time, right? This data has changed over time. This slide I prepared it about 4 or 5 years ago. I need to actually update it. So currently, the average daily trading volume in the forex market is no more 5 trillion. As at the time when I prepared this slide, it was 5 trillion. Currently, it's $6.6 trillion in volume, actually, right? It's not in quantitative, it's just volume. But if you divide $6.6 trillion divided by 100, then you should know the monetary value we're talking about, right? I mean, divided by 100,000, right? Then you're going to know the monetary value that is traded actively on the forex market on a daily basis. Now, look at the ones that compares to it. We have the stock market, which is 22 billion, and we have the which is the New York Stock Exchange. We have the Tokyo Stock Exchange, 18.9 billion, and then London Stock Exchange. You can see the forex market immensely dwarfs all of these other markets. So as traders, once you came to understand this type of metrics, then you want to play with the big boys, and playing with the big boys means that learning more about trading, the forex market than actually like meddling with the stocks, right? And you're also going to understand why trading comes easy, especially for retail traders. When I say trading, I mean the forex market comes easy because entry to barrier is literally non-existent, right? And I'll use this opportunity to explain briefly what I mean by entry to bar or barrier to entry. I should put it that way: barrier to entry, not entry to barrier, barrier to entry. So you realize that when I sent the link to your group or to the WhatsApp group, it barely took you 3 minutes to be able to just like sign up, and then you have your trading account. All that was needed from you is to just verify your trading account, deposit, and then you're a trader, right? So barrier to entry is what we're talking about, literally non-existent in trading. But if it had to do with a stock brokerage account, right? You have no idea the bureaucratic processes you're going to go through. I was opening I have like about two brokerage accounts already that I use to trade stocks, not CFDs, right? But because that platform both have CFD, you're going to also understand what CFD mean, right? So look, just don't worry if I'm mentioning some jargons. I'll explain all of them down. Just write them down in your diary. If it skips me, remind me to explain it. So I was registering with one platform, and it literally took me about 2 weeks to complete that registration. I had to register. They had to do a deep, intense KYC. So I had to literally submit all of my pay slips, because when I say pay slip, you're wondering, Kojo, but you're not employed. How do you have a pay slip? My company in Dubai literally pays me, so I have a pay slip. And then I had to submit my bank statement. I had to submit my residency. I had to submit like so many, 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 many documents, right? And then also to even submit my proof of wealth and net worth assistance just create a brokerage account. I almost got discouraged and wanted to stop, but I already initiated the process, so I had to see it through. But now, if you compare it to like the link that I sent you, nobody's asking you anything. All they're asking is that, what is your name, what is your email, what is your password, and then you have a trading account. So trading is very, very beautiful, straightforward, right? And also, just to reiterate, the platform you guys signed up to, Xness, is currently the biggest by volume, by user base, the CFD broker in the world. So when it comes to safety of the platform, security, just understand that your money, somebody is saying that your network and everything, is it me or is the person's network? You guys confirm briefly, because I'm just reading a little bit of the comment and then I'm seeing somebody complain about network. It's only him, eh? Okay, that's fine. That's good to know, as far as it's not, it's not coming from my end. Right. So, like I was saying, when it comes to the platform that you guys use, you guys should be extremely comfortable with Exness. Your deposits are safe. Nobody's going to what's the name? Run away with your money, and then all of those funny, funny, funny stuffs, right? Exness is a very, very safe platform that you can trust. Sometimes I even trust, not even sometimes. If you ask me now, I trust my Exness brokerage account than even my bank account in Ghana. So, and remember, when you keep your money in the brokerage account, you can keep it in any currency of your choice. You can keep it in dollar, euro, whatever, whatever, right? I recommend that all of you go through that little bit of painstaking moment to verify your trading account. Verifying it means that you're sending your proof of residency, and then you're sending your proof of identification. Proof of identification can come in the form of your Ghana card, your what's the name, driver's license, or your passport, and then proof of residency can come in the form of your rental agreement if you have any, or your property document, or your utility bill, which would also be in your name, or your bank statement in your name. Normally, a lot of traders struggle with the proof of residency. Proof of identity, it's so easy for everybody to just get it, but proof of residency, proof of residency can be annoying. I see somebody saying the verification, the vex pass, but you have to do it. It's a one-time thing. Once you do it, you're through with it, right? And you have no restriction on the platform. Nobody's going to hold your money, withdrawal, deposit, anything. So let's come to another important aspect. What is traded on the forex market? Money. There's nothing more, nothing less. The only thing traded on the forex market is money. When we say money, how do you understand it? Let me make it make sense. You see that, unfortunately, for our mothers and uncles and brothers and sisters, about 2 days ago, we had a misfortune in one of the biggest markets in Ghana, which is what's the Kantamanto market coming and getting set on fire. Right? Now, you might want to ask yourself, what are some of the things people lost? People lost their inventories. Inventories in what? In clothing, in shoes, in bags, in jewelries, so many stuffs. Because their inventory is like all of these commodities that I've mentioned, or all of these user end goods that I've mentioned, right? But when you come into trading, we don't deal with any like physical product like, okay, what's the name, clothing or shoes or anything. In trading, all our inventory is related to specifically money, right? So money is your absolute inventory in trading. You deposit money, you trade money, you withdraw money. You deposit money, you trade with money, and you withdraw money. No addition, no subtraction, right? So we trade money, right? If you want to trade, all you do is that you create your trading account, just like I showed you guys to do, which is your brokerage account. Then after brokerage account, you create your trading account. Then after trading account, you verify it, you fund it, whether you're funding $100, $1,000, whatever amount you're funding is up to you. Then you trade. You trade by literally speculating on the buy side or sell side of any of the instrument. We're going to get into the platform very soon. It comes off well, you make money, then you can withdraw. You lose money, then you got to come back again, better time. But if you learn the proper things, if you learn from the rudiments, then it's hard for you to like go on the losing path, right? That's why we are having this session to teach you how to do these things properly. So what is traded on the forex market? Right now, with all this, somebody's probably still asking what is actually traded. Because if you're saying that money, what do you mean by money, right? So because there's not anything physical in trading, it can be a little bit confusing. I know that I've seen that so many times. I've been teaching trading for a long time now. So sometimes when you're teaching traders, like, or you're teaching beginner student that what is traded on the market is money, then they are confused. Like, what do you mean by money? Right? Because there's no any physical thing being traded, can be very confusing, right? Think of buying a currency as buying the shares in a particular country, just like buying stocks of a company. This is the most basic way to explain it. But in trading, right, you're either buying or selling, right? If you're either buying or selling. What do I mean by that? If you're buying, this is where the slide is saying, well, think of it as if you're buying interest in a particular country. So let me make it make sense. Imagine that you live in Ghana, but your uncle visited from the UK, right? And then gave you, let's say, £500. Right now, you're in Ghana, but you have £500. You are invested in £500 at that moment. You can choose to go to the Forex Bureau and change that £500 instantly. If you go to a forex bureau and then the 500 pound, they're saying that pound to pound to cedis is equivalent to 20 cedis. It means that your 500 times 20, then you're going to get what 10,000 Ghana cedis. But for once, you're probably thinking this Ekufado government is full of just devaluing and depreciating our currency against the foreign currency. So I am not going to change my 500 pounds. I'm going to hold it for the next 2 months, the next 3 months, and then I know that pound to cedis is going to go to, let's say, 30 cedis, right? And if indeed you're right and the pound to cedis goes to 30 cedis, 500 times 30, then you rather make what, 15,000 rather than the 10,000 that you'd have made. So at that point, it is regarded that you are invested in the UK economy than in Ghana economy. So in trading, any instrument that you see, the moment you decide to buy that instrument, it means that you're favoring that instrument to be strong. And then the moment you're selling off an instrument, it means that you are anticipating that that instrument is going to be weak. When I say instrument, I'm replacing instrument with the country's currency you are buying, right? So this is like a basic way to put it again. It says what when you buy, say Ghanaian cedis, you are basically buying a Ghana's economy. You are betting, right, that the Ghanaian economy is doing well and it will even get better as time goes on. Once you sell those shares back to the market, hopefully you end up in profit. So that's the way I just explained it briefly. Yeah, so I already mentioned like the most actively traded currency pairs, and these are the list, right? So there are other two that are not here. I think it's the Russian currency and the Chinese yuan. But quite recently they've been added, so people trade them actively. But you have the US dollar, you have the euro, Japanese yen, Great Britain pound, Switzerland franc, Canadian dollar, Australian dollar, and New Zealand dollar. You need to just know these instrument symbols off head, right? So if you see on Twitter, right, I know the majority of you are coming from Twitter, you see me writing some things and then you always ask yourself, the most common statement that I see is that Charlie, the thing they pass my eye top, I know they see anything. And you get some people saying, I wish that they understand this thing. You're beginning to understand them. In trading, we represent these currencies that you're seeing here with these symbols here. So XAU is gold, right? We'll get to that, right? I don't think XAU is part of this because XAU is a commodity, it's not a currency, right? So I saw in the comments somebody asking what is XAU, right? So let's focus on the currencies for now. So the moment you see NZD, just know that we're talking about what? New Zealand dollar. The moment you see AUD, just know we're talking about Australian dollar. The moment you see CHF, just know you're talking about what? The Switzerland franc, right? And then GBP, Great Britain pound, JPY, Japanese yen, EUR, euro, right? And you would not necessarily need to memorize it as if you're doing like some chew and pour because in the platforms they are already there. And for the most part, if you hover your mouse around um that symbol is actually going to pop up and show the name of their symbol and all of that. But you just need to know them, right? So that in conversations, in group chats, and in the Telegram groups and on social media, you're not going to ask somebody what is the meaning of CHF, what is the meaning of EUR, right? You just know it. So this is a historical aspect of the financial market, but we're not going to worry ourselves too much with this. Let me not bore you with history, right? But it can be interesting when you learn a little bit about the history and evolution of the forex market for your own knowledge sake, right? So prior to like the 1990s, the trading in the financial market was only just limited to even the big institutions and then the hedge funds and the central banks and commercial banks. It was when there was influx of internet and innovation in financial technologies that allowed traders on the retail level to even participate on the forex market, right? So this one goes into details in telling you the Bretton Woods Accord that basically broke the gold standard and then literally let the world dissolve from that fixed exchange rate regime, which allowed us to peg our currencies to dollar, which was in turn also pegged to gold, to having a floating exchange rate regime where traders have, countries have their currencies fluctuating against another country's currency, and then the strength or weakness will be determined by the forces of demand and supply and the econometrics of the country. So, look, these are very macroeconomic and microeconomic related. You don't want to bore your head, but it will be good if you take time to learn and read all of this for learning purpose, right? For learning purpose. So that's to count on with the historical development of the forex market. Remember, the forex market is an OTC. And when we say OTC means over the counter. Over the counter means that there is no central location. There is no one building in New York or one building in Germany or one building in Ghana or one building in Nigeria that you say, I'm walking into this because that is where the forex market is. No, the forex market is on your laptop, is on your mobile phone, is on your tablet. And then once you have internet connection in your home, then you have the forex market with you. That's what we mean by decentralized, right? Over the counter. It's a decentralized. Centralized markets are the what's the name? Stock exchanges, right? Where we have the New York Stock Exchange, London Stock Exchange. You know, there's a building. When you walk to that building, you're walking to the New York Stock Exchange. So many people go to US and then take pictures in front of the bull and bear statue that is right in front of the New York Stock Exchange. But have you heard anybody say, I'm going to US to go and take picture by the Forex exchange house or anything? No, none of that exists, right? And yeah, so you can see here, forex market is decentralized, and it's literally impossible for anybody to be monopolistic on the market, right? Monopolistic means that somebody cornering the market. Cornering means that they are able to use their own resources to influence the directional movement of the market to determine that, okay, we want the market to trend upwards or we want the market to trend downwards. Remember, it's the forces of what demand and supply that lets these work, right? It's the forces of demand and supply. You're going to understand that also into much details. The forex market is huge with a trading volume of 6 trillion, like I said, 6.6 now, every day. And the competition between dealers is so fierce that you get the best deals almost every single time, right? So, one thing that you must understand is that when it comes to the forex market, at every single time, you can either buy or sell. And remember, there's nothing like you place buy and it tells you that, oh, wait, we are not getting the counterparty transaction. Or you click sell and say, oh, wait, the money in the market is finished. No, as far as on your platform, the moment you click buy, within 1 second, it'll buy. The moment you click sell, within 1 second, it'll sell. It means that there's so much liquidity. Like at every single point in time, somebody is ready to buy at a price or somebody is ready to sell at a price. So all the time there's transactions, there's volume going on. Right now that I'm speaking with you, now, if I see any trade opportunity and then I click on buy right now, trust me, within the next like half a second, the trade is going to be running, right? So this is like how you get the big institutions with their dealers, watching the market and all of that. This is just like a brief picture to give you like a good perspective. But this is like a very old time, how big institutions like UBS and then Citibank, they used to have their dealers and traders in their office just trading and speculating on the market, just as we would do by our computers in the house. So this is a very important part of the chart or important part of the slide, right? One of the important part of the slide. I'll take my time to explain it briefly. You can see here that what we have online FX market makers. Now, think of FX market makers as the brokers, right? An example of the broker is Xness that all of you signed up with, right? We call them the market makers, and they are the intermediaries. Without them, you cannot actually trade on the market, right? Prior to the online market makers, like I said initially, trading only was taking place among this side of the chart, these people here, which has to do with what the banks, right? The banks used to just trade among themselves. So we have the EBS, we call it the electronic brokerage system, right? And it's like a platform that these banks communicate among themselves and negotiate prices of buying and selling, right? So they'll just text themselves and then say, okay, I want to buy this, I want to sell this, and then the price, and then it's just like, a mechanical way of just, negotiating prices, and it also influencing the directional movement of the market. And remember, these people, they are trading against themselves, right? If you come to learn trading for a while, you're going to get to a point where you're going to start hearing some cliche stuffs that some people will tell you in other groups that, oh, the banks manipulate the market, the banks are trading against us, the banks are doing this. Remember, the banks are even in competition amongst themselves, so nobody has time to trade against you, right? People use that to compensate their bad trading judgment or their bad trading skills and say, oh, the banks took my stop loss or the bank did this, right? So you just got to be better at trading and not be very pessimistic when things are not going in your favor. So like I said, they used to just trade among themselves, right, using the electronic brokerage system until financial innovation technology came around. Then you have what? The platforms like the online market makers, which in turn is the brokers, right, who are the middlemen here, right? They said, what? Look, you guys have something amazing going on. We want to get in on it, right? And then you tend to have what? Independent platforms like MetaTrader, which is like the platform that I allowed you guys to download. The most popular one being a MetaTrader 4 and MetaTrader 5. Currently, the MetaTrader 5 is the most newest one and relevant one, which has a lot of feature. That's why I'll let you guys download it. So brokers, MetaCodes is an independent technology provider for trading platforms, right? So this MetaCodes has a good relation with this interbank market to take the price feeds, right? So the price feed is showing your meta code. The broker is offering you that platform because you signed up with them and then you created an account. So you can see that gold price is moving here, pound USD is moving here, blah, blah, blah is moving here. And then you can trade them on the MetaTrader platform because there's an API connection between MetaCode and then the broker. And so many brokers offer MetaTrader, right? So many brokers, like not only Xnest, so many other brokers. But obviously, because you're trading with Xnest, then I recommended that. Now, this is us here, right? Retail trader one, me, retail trader two, you, and your friend, and then the other friend. We are all connected here. So we are what seeing the price feeds from this is EBS, and then we are seeing it on our platform, and then we are trading. So this just gives you like a snapshot overview of whatever is going on in the Forex market. It's a huge market and it's a serious business, right? So that's why when you come to our terrain, anytime somebody is trying to compare the Forex market to other, gamified platforms like football betting and all of those things, then we despise it because trading is a serious business. You don't want to mix trading up with an absolute gambling, endeavor like football betting or sport betting. So this also gives you like a brief hierarchy of the brokerage. I mean, it gives you a brief hierarchy of the participants in the Forex market, right? So you have the major banks at the top, electronic brokerage services, just like I explained to you, where the technology is. Then we have the medium size and small size bank. Then we have the retail market, retail ECNs, hedge funds, commercial banks, and all of that. And retail traders are at the bottom of the food chain, right? We are always at the bottom. Being at the bottom does not mean that you cannot succeed and then make a lot of money, right? We've seen so many of us do that already. Forex market and liquidity. Unlike other financial markets like the New York Stock Exchange or London's Forex market has neither physical location. I think I explained this already. Forex market is considered as over the counter. We talked about this already, and it's open 24 hours, literally 5 days a week. So this is a composition of the most traded, right? Dollar is the most traded currency. You can see the percentage share in the pie chart, right? For how many people trade the dollar, which is the USD on a daily basis, right? And then followed by what's the name? Followed by the Great Britain pound, which is 4%, equal to the Japanese yen, euro, and then the others. Forex market and liquidity. So we've talked about that, most traded and all of that. The trading volume brought by speculators is estimated to be more than 90%, right? So this is a very basic statistic, but I'll explain what it means. In trading, we have trading for speculative purposes and then for transactive motives, right? For transactive motives means that like you could have a company like Apple who have subsidiaries and assembly machines in China and all of those things. But Apple is a US company, right? So being that Apple is a US company, if they need to pay their workers in China, in Hong Kong, or in any of those foreign countries, India, Indonesia, they cannot just go and carry dollars and be paying their workers or staffs there. They need to pay them in their home country currency, which means that what they would have to exchange their USD into those currencies, right? Or if you are a trader in Nigeria or Ghana, you're trying to buy cars from US market, the UAE market, you have Naira. You cannot bring your Naira in sack and go and buy those cars. You need to exchange them. On that basis, you are trading the currency market, but you're trading it for transaction purpose. You're not trading it for speculative reasons, not for profit seeking, just for transaction purposes. But that constitutes what 10% of the reason why people trade. The rest of the 90%, as you can see rightfully here, is for speculative reasons. Speculative reasons means that the people are buying or either selling for profit motive. They want to actually make money from the decision they are making, right? So yeah, we talked about how to buy and sell, how to make money on the forex market. It's either you're buying or you're selling, right? It's a simultaneous transaction, right? So simultaneous means that in the forex market, there's a way that we think about it, right? Think about it this way. This can be very tricky. It's one of the reasons why trading is so hard for you to learn, but you have to be very serious here, right? In trading, when you buy, right, you're going to see the buy trade running in your account until you're ready to what? Close. Let's say when you buy and then the market is running at a profit of, let's say 500, right? When you close a trade, let's say you're okay with the profit, you close a trade. It indirectly means that what you sold, right? You sold your position to somebody else. You're not going to see that it's written there sell. You're just going to see close. But you have to think about it like you sold, right? Let me make it make sense. Imagine that you bought iPhone 16 for 10,000 cedis, right? You bought it, right? And then you were holding it, and suddenly the value of iPhone 16 is what? 12,000. So plus what? 2,000, right? So you are holding a position in iPhone. If you want to make your profit of cashing out the 12,000 because the value has increased, what do? You have to sell it to somebody. And how much will you sell it to that person? To 12,000, right? But in trading, you're not going to see what sell. You're going to see close, right? So just think about it in that way. And in trading, you can also sell and make money, right? So it's not a one-directional speculative basis. And that's what makes trading very, very interesting, entertaining, and enjoyable to trade. I'll explain the aspect of the sell for you briefly, right? Think about it this way. In trading, when you sell, you have to buy back at a lower price, right? So imagine that somebody dashed you an iPhone, and then the iPhone is selling for what? The current valuation of the iPhone was, let's say, 10,000 cedis again, right? iPhone 16 at 10,000. But when a person gave you the iPhone 16, you just thought about it that this iPhone, we are in September, right? The person gave it to you in September. By March, right? By March, this iPhone value is going to reduce because they are going to be trying to release iPhone 17. So you are speculating that what? The iPhone price will reduce. So what do? You decided to sell the iPhone right now when the person gave it to you. So when you sold it, guess what? You have what? Pocketed the what? 10,000, right? But when you pocketed the 10,000, remember that you've sold the phone, you are holding the physical cash of what? Physical cash of 10,000 cities, right? Imagine that lo and behold, by March, then the iPhone 16 price dropped from 10,000 to what? 8,000, right? What will you do? You have to now go to the market and go and with your 10,000, deduct what? 8,000 from it to now go and buy what? The new iPhone, right? Remember, iPhone 16 is still iPhone 16. Nothing changes. But now instead of buying it for a full 10,000, you buy it for what? 8,000, and then you pocket the balance of what? 2,000. So at that case, we say what? You sold and bought back at a lower price. Do you get it? Is that part clear or it's confusing a lot of you? Let me know if it's clear. Did I explain the sell part? Did it make sense? Is it easy to follow? It's clear, right? Yeah. I'm glad that is clear. So in trading, you can buy and make profit, or you can sell and buy back at a lower rate and also make profit. So it's not only like buying and selling. I'm glad you guys understand it. Let's move on from here. So you see us buy positions, sell positions in the market all the time as traders. You see us buy, sell, right? So if you see buy, it means that what the person is anticipating that what the market should go up, right? Then you're going to see one dotted line there, and then all you're going to see is what? Buy. And then you're going to see what? Sell. It means that the market is probably going up. The person sells in anticipation that what? The market should come down. And then you're going to see some dotted lines here like that. And then the person's position is there what? For sale, right? So we are either buying or selling. That's why you see that thing that somebody will ask you on social media, are you a music producer? Are you a this? Because they've seen the chart that is going up. No, the chart is just the price representation of what is going on in that particular instrument. It has nothing to do with music production, right? I hope it's clear on that one too. So now when you see the buy on that white chart with just the candles, you're not going to be confused. When you see the sell too, I hope you're not going to be confused. You're going to just understand that, oh, this person is just selling on that instrument or buying on that instrument. More specifically, that the currency you bought will increase in value. Yes, that's just what I explained, right? Now let's come to a very important part, very, very relevant and important part in our discussion. This is where a lot of people actually also get confused when they are trying to learn trading by themselves, right? But pay attention, it should be easy for you to follow. It should be easy for you to follow. I hope nobody is disturbing in the group chat. If anybody is disturbing and spamming, just draw my attention. I'll just remove the person. Quick. No disturbance is tolerated. So in trading, currencies are paired, right? Let me put it that way instead. In trading, currencies are paired. So when they say they are paired, they are put together, right? When you say they are paired, they are put together. You can see here that what we have Euro USD, right? And when I say they are put together, they are pre-done for us. You, the trader, cannot wake up and then pair any instrument for yourself. They are already done on the platforms. You go on the trading platform, MetaTrader, or any of those ones, you see them there. So you don't have to just go and say, I want to trade USD Euro, or I want to trade Euro, USD GBP. It's funny. If you say it in the trading community, we're going to watch you like, bro, what are you talking about? Because it's very foreign to us. The instruments are already pre-arranged, so it's just a matter of time until you familiarize yourself with how they are paired against each other. But yeah, that's what I mean. So when you see Euro USD, it means that they are together, right? And the easiest way to understand it, I'll use our own local currencies to explain it, right? So if you go to the Forex Bureau, normally what you're going to see is USD, USD, GHS, right? I just put a dollar there instead of the CD. Let me just clean this one. USD, GHS. And then you're going to see, let's say, what, 16. Have you ever asked yourself what it really means? I know that when you see it on social media, or you just know that, oh, the dollar rate is what, 16 now, the dollar rate is 15.8, the dollar rate is blah blah blah, right? But most people don't understand the logic behind the quote. It's so simple, right? So remember, every currency pair has three alphabetical numeracies or alphabetical denominations, just illustrating them or just signifying them. So USD is representing the United States dollar, and then the GHS is representing the Ghana cedis, right? So what this basically means is that one unit, right? So remember, before I even come there, we always call the first one, right, the base currency. Base is spelled B-A-S-E. Okay, it's here, base, right? And we call the second one the code currency, right? Just write it down, keep it in your head. The first one, two, three is called what? The base currency. The second one is called what? The code currency. Base, code, right? In exchange rates illustration, what we mean is that 1 unit of the base will give you the equivalent current exchange rate of the quote. 1 unit of the base will give you the equivalent exchange rate of the quote. So if you see USD GHS, what it means is that $1 is equivalent to what? 16 cedis. So it can be the same for the Nigerian one too. If you see USD NGN, and then you're seeing, let's say, 1,800, what it means is that $1 is equivalent to 1,800 naira. It's as simple as that. So this is for the exotic pairs, but it is the same for the internationally actively traded ones too. So if you see Euro USD and then Euro USD, you're seeing something like Euro USD 1.2000. It means that when you have €1, you're going to get what? $1.20, right? That's just what it means. I hope this part is very clear. I hope it's clear. Let me indeed see if it's clear before I move on from here. You guys are open the chat. Is it clear? Do you guys understand the base and the codes before I move on? Clear. All right. Okay. Now that it's clear, we just moving on. Somebody says not clear. Okay. I'll just go on briefly. Again, just one more time, right? Just one more time. So I'm saying that in every instrument, they are paired together, right? In trading, instruments are paired together. Like you're seeing here, you have what? GBP, USD. We are seeing USD, JPY. The first one, two, three is called the base currency. The second one is called the quote. So base, quote, right? The first one is base. This one is what? Quote. And when you go to the banks, Forex Bureau, or anything, you'll see the base against the quote, base against the quote, and then they'll put some number behind it or beside it. Let's say they'll put here, let's say 1.5, and then they'll put here to, let's say, 1.7, right? And I'm saying that if you go and you see something like this, always you're thinking of it in the base logic. When I say the base, it means that the base is your first point of thought. First point of thought. So here GBP will be your first point of thought, and here USD will be your first point of thought. What it means is that always you're thinking that if I've seen GBP USD 1.7 or I've seen USD JPY 1.5, what it means is that 1 GBP is going to give me 1.7 USD. The same way, 1 USD is going to give me 1.5 JPY. And if you see this and it's written 1. Let's say 8, it means that what? €1 is going to give me 1.8 USD. This is the best way I can explain it. If you don't understand it, then it means that you need to go back to school. You guys understand it? Is it clear? Before I move on. It's clear. Right. So I hope the person that was confused right now is clear. If it's not clear, I don't know. I cannot help you again. Need to go back to school. Right. So let's move on from here. Um, I think now everybody knows how to read currency codes, right? Right now, nobody's confused. If you see Euro USD, you know what it means. If you see GBP USD, you know what it means, and all of that, right? So it's very interesting that we have crossed that milestone. Now, so many people know how to read the codes. This is also another interesting part that we are tackling now, right? So in trading, like I said, you are either buying or selling, right? You are either buying or selling. And this part, I'm going to allow the chat because from here going, things can be very tricky. From here going, things can be a little bit tricky, right? So look at it this way, right? But it shouldn't be difficult because I already explained how meaningful it is, right? If you are seeing some instrument and then you're seeing that, okay, this is GBP USD, and I've done my analysis and I feel like it's going to go up, what do? Then you want to what? Buy. And in trading, where you buy is what we call what? Your entry price. The very place you bought it is what we call what? Your entry price, right? Your entry price. Now you see that what we have what? Stop loss and take profit here. And this is why we always say what? Trading is literally not an entirely risky endeavor. Just like people make it sound on social media like, hey, this thing there, if you take your money, go put inside, you go lose your money all. If you take your money, go and put inside, you go burn your money. Charlie, trading this, trading that. No, it's all a fad. It's all like, people just instigating something that is literally non-existent or they know nothing about. Because one of the most easiest thing to do as a trader and prerequisite is what? Risk management. And they are all embedded right on the platform. You don't even need to think hard to literally manage your risk. In fact, the best way I can put it is that in trading, you determine how much you want to risk before you even get in a trade. You determine how much you really want to risk. Like nobody is going to hold your hands to it. It's not like, I mean, even when it comes to betting, quite recently, there are a lot of risk management logics around the way they introduce the betting platforms. What I mean is that when it comes to like the betting platform, you can deposit like, let's say, 10,000 in your sporty bet to 20,000, but it does not mean that stake all your what's the name matches with the 10,000. You can choose to just place 1,500 on this match, 200 on this match, and all of that. It's the same with trading, right? Okay, somebody's complaining about the volume. Let me just increase it again. I hope that the volume should be loud enough now. It's the same with trading, right? So trading, you can have like your trading account of, let's say, what's $300, right? And in that $300, you can determine that, okay, I want to risk $10 per trade. I want to risk $5 per trade. I want to risk $20 per trade. Yes, you can actually determine that, right? And what we use to safeguard ourselves in trading um, after we have determined our risk is what we call the stop loss, right? The stop loss that you're seeing here. So because you are buying, your stop loss needs to be what? Below the price, because buying means that you're expecting the price to go up. And it also means that what? Your take profit would be what? Above. Take profit in trading means that where you are anticipating to close your trade. Stop loss is synonymous to when the trade does not go in my favor, close me out here. Close me out here. And take profit means that when the trade goes in my favor, I want to book profit here. Remember, all of these are non-mandatory, right? In fact, you have to first place the trade before you can have the entry price. But nobody's going to hold your hands to force you to set stop loss, and nobody's going to hold your hands to force you to set take profit. You set it voluntarily. But if you want to trade properly, you want to manage your risk, and you want to keep your expectation in check and your account safe, then it will always make sense to put stop loss on every trade. But For take profit, you can be flexible with it, but you cannot negotiate putting a stop loss. I hope that part is clear. You can negotiate with putting take profit, but you cannot negotiate with putting a stop loss, right? Is that clear enough? The stop loss and take profit for the long. So in trading, long again is equal to what? Buy. So when we say I'm going long, or if you see me right on Twitter, I'm going long on GBP, I'm going long on this, right? Don't get confused. All I'm just saying is I'm buying, right? So I'm saying that is this clear? The entry, take profit, stop loss. I'm seeing some people saying no, it's not clear. Yes, it's clear. Which one is it? Is it clear or is not clear? And also, and also, and also, there's one thing. Um, most of the platforms, right? Most of the trading communities, we don't necessarily write stop loss. So if you're in our community and you see SL, we are still talking about what? Stop loss, right? It's short abbreviation for SL. And if you see TP, right? That's why you see, that's right. SL this, TP hits, SL hits, TP hits, SL hits, TP. It's like stop loss hits, take profit hits. It's just like, short terminology or jargon in the trading world. So you just got to like go with the flow. This is very basic. So the people that are already confused here, if you're confused at this very basic point, right, then it'll be difficult for you to move ahead. Oh. Trading has a lot of details. So don't get confused at this at this basic place because somebody say thank God is recorded so that I can watch and understand. Yes, very important. But remember, all of the things that I'm teaching here is very basic. But anyway, I can understand, especially if it's absolutely new to you. You've never learned trading. You don't know what it is. It can sound so confusing and a lot, but just calm down, calm down. It will all make sense, right? So I'm saying that in trading, you can either decide that you want to buy or you want to sell. And if you're buying means that lines that you see on our chart, right? You see that lines going up, going down, right? Buying means that you are expecting that line to go up. The line is representing that instrument you're trading. So let's say GBP USD. And I've watched the chart and I'm like, I'm going to do what? I'm going to buy. Buying means that I expect GBP USD to go up, right? And remember that what I said, that if you're trading and then you see instrument paired against themselves, you always think in the basis of what? The base currency. So if GBP USD and you're expecting it to go up, it means that you are indirectly expecting the pound to be stronger. And if the pound is paired against means that they are fighting. The pound is paired against the USD and you're saying you're expecting the pound to be stronger. It's logically and indirectly means that you're expecting the USD to be weak, right? Nobody's going to tell you that, but in trading, we expect you to just know it. If we're expecting the pound to be strong and it's paired against the USD, and then you're expecting the market to go up, indirectly you just must know that then that person is expecting the dollar to be weak. Like I said, nobody's going to tell you. It's just the same way where you see USD GHS and then it is what 10 and suddenly it is what 20. Nobody's going to tell you that the CD is weak against the dollar. But you must know, what if the CD is weak against the dollar? What does it mean? It means the dollar is stronger against the CDs. Doesn't it make sense the same way? If you see USD NGN, and initially it was 1,000 and suddenly it's 1,800, doesn't it mean that the naira is so weak against the dollar? But if the naira is weak against the dollar, what does it also mean? It means the dollar is strong against the naira. It's a vice versa scenario going on here, right? So in that case, if you're buying, that means that you're buying what? The base currency. But when you're buying, it means that you're anticipating the price to go up. And if you are expecting the price to go up to safeguard your investment, you must put what? Stop loss. That's what I determined here. We'll do all of this on the chart and it will make absolute sense. It will not confuse you again. and then you take profit here, right? So let me just mute this for a while. Let me mute this for a while, right? And let's focus because I know that the chat is confusing some of you. And short is also another word for what? Sell in trading, right? And like I said, short means what? You're also selling. And if you're selling, right, just like the way we illustrated the sell logic, it means you're expecting price what? To drop. And if you're expecting price to drop, you want to put your entry here. Your stop loss would be what? Above that region that you think like the market should not get there, which also means that if the market get there, you are thinking that, okay, then I'm wrong if the market get there. And your take profit would be below, right? Your take profit would be below, just like I have illustrated here. So we are going to get gradually into the technical stuffs. We are gradually getting there. You guys have learned about how the forex market works, 24-hour market and whatnot. Learned about the bid and ask. We are gradually getting to the complicated parts. That's why I said it's important to understand um the basics very strongly. In trading, we have what we call the bid, ask, and spread, right? Trading is a learning endeavor. You know, trading speaking tree. But if you're from Nigeria, all I'm saying is that trading, it requires learning. Trading is not an endeavor that, oh, just give me this app, let me just press and do this. No. That's why you only have people that are really smart, dedicated, and serious doing trading. That's why we don't bother to invite anybody in trading because it requires you to literally sit down and learn. If you don't learn, you cannot do it. You know, so if you see us doing trading on the social media and we're just like chilling and not speaking, this is the effort it requires. This is look the most basic session you are having in trading, right? This is the most basic. This I've not even introduced any complex terminology here, but already so many people are confused. So imagine we get into the serious business, which we are getting into gradually, right? So all forex codes are quoted in pairs. I think I've explained this perfectly. Everybody understands me now. And then we've talked about this right now. So in trading, now let's come to how your account metrics would look like. So you're going to see in your trading account leverage, right? We've not explained it, but we're about to touch on it briefly. You're going to see margin. I think where you experienced leverage was when you were setting your trading account up. And I told you guys that the recommended leverage for you is 1:500 and above. And then I had so many of you choosing 1:500, 1:600, 700. It makes sense. It's okay. Leverage is why retail traders, which is me and you, are able to participate on the market. If it was not for leverage, we would not be able to trade. Leverage is the only reason why we are able to trade, and then you understand it very soon. If not for leverage, you cannot use your small account to participate on the forex market, right? Back in the days, the requirement to be able to trade in the forex market, right, was to transact a minimum of 100,000 units of any instrument you're trading. So it means that if you want to trade GBP USD for, let's say, a buy, you want to buy pound and sell the dollar, then you have to buy 100,000 pound. But do you have 100,000 pound in your trading account or in your bank account? Or have you ever seen 100,000 pounds before? Perhaps never, right? You've not seen it. So it means that you cannot trade. But what if I tell you that with your $1,000, right? With your $1,000, I can still let you trade as if you have what? As if you have 100,000. How can I make that work? Hmm? What if I tell you that with your $1,000, I can make you trade, or with your £1,000, I can make you trade, right? As if you have £100,000, right? Do you understand what I mean? What if I tell you that with your with your £1,000, I can make you trade as if you have what? £100,000. That is by the power of what? Leverage. Right? You realize that when you were on the platform and then you were setting your account up, you had the opportunity to choose the leverage ratio. And then you saw some being what? One is to what? 100, one is to 200, one is to 500, and so on. So imagine that you chose 1 is to 100 as leverage, and then you have a trading account of 1,000, right? What does it mean? Just take your phone or your calculator and multiply 1,000 by the 100 here. What are you going to have? 1,000 multiplied by 100. What do we have? Let's calculate it together. 1,000 times 100. We have what? 100,000, right? So by multiplying leverage, you have what? 100,000. The 100,000 that you have multiplied is what? Your controlling stake. The 100,000 that you have multiplied is your controlling stake in the market, even though your balance is only what? 1,000. Your controlling stake by virtue of what? The 100,000 leverage you chose is 100. I mean, by leverage of 1 is to 100 that you chose is what? 100,000, right? I'd open the chat briefly to know if you guys followed. Did the leverage part make sense? This is the most basic way I can explain leverage. Does it make sense? So you choose leverage of what? 1 is to 100. But you don't have money to trade. So like I said, initially you are required to trade what? 100,000. But we don't have 100,000 to trade. So the financial market, brokers, technology providers, they introduce something called leverage. And leverage is in ratios from 1 is to 100, 1 is to 200, 1 is to 300, so and so. You are at liberty to choose any leverage by yourself. Nobody forces you to it, right? But you have to understand what it means to make the right choice. And what it means is what I just explained here. That when you choose, for instance, 1 is to 100, and then your trading account is 1,000, just multiply the 100 by 1,000. Then you're going to get what? 100,000. This 100,000 is how much you can control on the market with just your $1,000. Controlling means that you can trade up to the tune of 100,000, but you only have $1,000 in your trading account. In the same way, if your trading account was, let me give you guys another example that is going to even shock you, right? Imagine that your trading account was $100, right? Just $100. That's why you see people flipping $100 to 100,000 in trading, and then so many people are surprised, like, is this possible? Is it real? Can it happen? Right? And I'll show you why people are able to get away with that. So you choose, let's say 1 is to 2,000 leverage, right? What does it mean? Multiply 2,000 times 100. What do we have? We have what? 200,000, right? Isn't it? So it means that even though the person has what, only $100, by virtue of choosing one leverage of 1 is to 2,000, they can what? People say on mute. Wait. What's happening? The volume is okay. Guys, can you hear me, or it's coming from their devices? Let's confirm quickly. Can you guys hear me? Okay, if you can hear me, guys, those who are complaining, please check your device. If you are using some Bobo Mashi mobile phone or laptop, don't come and blame me. Check your device. Right. So let's go on from here. Let's go on from here quickly. So So I think that oh wait, I just want to know. So let me just unmute, right? I really don't want so many people distracting the group with the conversation. That's why I keep muting. Pardon me for that. I'm not trying to, you know, block your shine from chatting. But yeah, I'm saying that are we okay with the leverage explanation up to this point? Are we okay with the leverage explanation? Are we all good? I think yes, everybody is with me with the leverage, right? Now, if you understand leverage, then we've crossed a bigger part of this job today. If you understand leverage, then we've crossed a bigger part of the job today, right? I'm glad that you guys understand leverage already, right? Maybe I should just use that, the same scenario to explain margin, right? I should just use the same scenario to explain margin now. So now let me just mute the chat briefly, right? I'll unmute it again. I'll unmute it again, but let me mute the chat briefly. Right, so margin, now we are on what? Margin, right? We are on margin. Remember, we just finished leverage. Leverage, margin, balance, equity, free margin, all the things you are seeing here, they are interconnected. They are one. That's why you are seeing all of them on one screen, right? They are all one, right? So we explain leverage like I'm going to write it here. Let's say you have $1,000. Let's use dollar now. And then you chose leverage of what? One is to 100. Then it means that you can control what? 100,000, right? We've established this already. We've established this already. Now, remember that what? Your money was only 1,000, but now you're controlling 100,000. That means somebody must have borrowed you what? The 99,000, right? Somebody must have borrowed it to you. Who borrowed it to you? The broker. The broker borrowed you this. Borrowing you this does not mean you can go and withdraw it and go and spend it if you are already entertaining that. Some of you, you think that you are smart in life. Yeah, I've unmuted it. Were you thinking that, could you say that if I put 1,000, the broker will borrow me 90 now, then make I put 1,000, then if them borrow me, I withdraw, I'm sharp, sharp, sharp. You lie bad. That's not how it works. Borrowing you does not mean that you can withdraw that money. It does not happen in trading. Borrowing you this only means that what? Fictitiously, you're not going to see it in your trading account. In your trading account, you're still going to see the $1,000, right? In your trading account, you're going to see the $1,000 that you deposited. Just that when you trade, you can trade in volumes that surpasses the $1,000. But how would that happen? If Kojo, you are saying the broker will borrow me the 99,000, how is it that I'm going to trade and then it will not affect them, right? They have the technology in place to make sure that it does not affect them. And that is where margin comes in, right? So to protect themselves, if you trade, let's say you're trading GBP USD, right? And then you're placing a lot size of one. We'll explain what lot means very soon, but just take it like that. You're trading a lot size of one, right? One lot. One lot means that you're trading what? 100,000 units, which is equivalent to the money that you have to control. Now, guys, remember that if you're trading one lot, right? In trading, we have something we call pip, right? I'll explain the lot and pip in the next slide very soon. If you're trading one lot, then every pip is equivalent to what? 10, $10, right? You can write this down in your notes and everything, right? So if you hear traders say, oh, pips and this and this and this and this, right? And the lot size and this is the terminologies I'm explaining them. I will explain it a lot and pip separately and fully, but for the scenario sake, just get it, right? Now, if the trader places one lot, that's very huge on the market. To place one lot is very huge. right? It means that you're placing literally equivalent of what 100,000 units on that trade, right? Now, the one is used to substitute 100,000 just so that we can trade on a platform quickly. Imagine that you didn't have to just put one and you have to put 100,000 and now you have to trade, let's say, 10 lots. That means you have to put 10 million. So you press 1 and 0 0 before you finish, the market has already even moved. That's why we put 10 and 1 to signify these ones, right? To signify these ones. So just get it. Now, because the broker does not want to lose um your money or does not want you to lose your money that would eat into their money, that will eat into their money, which is a 99,000. Every trade you place, they put aside a margin from your account, right? And there's a basic mathematical way to calculate it. We don't need to bore our head with the calculation. We don't need to bore our head with the calculation. Right? You don't need to bore our head with the calculation. But let's just say that with your $1,000, you traded one lot of GBP USD. The broker can put aside, let's say, $300, right? The broker can put aside $300 from your account. That is set aside as what? Margin, right? $300 from your account is called what? Margin. What does the $300 mean? The $300 means that if the trade is not going in your favor, the broker has the $300 as a safe bet to protect their 99,000 capital. Imagine like you place another one lot again. Guess what? The broker is going to set aside what? Another $300. Then imagine you place another one lot again. The broker is going to set another what? $300, right? So far they've set aside what? $900. Are you with me? Then imagine that you place another one lot. What will happen? You see on your platform no money, but you have money. But now they are saying no money. Then you're confused as a beginner. You're asking yourself, why this thing they do that? Then you probably go and be texting somebody and worrying that I get money, but they place the trade, they say no money, no money, but I get money. No, because you have exhausted your margin. You have exhausted the money that you've set aside. So if you're trading, you're seeing no money, no money, no money. Don't go and be crying and calling me and saying, could you deposit money? Then steal my money. You tell me, say the Xness people would then be good. But if I place, they say no money, but I get $1,000. Which kind thief people be? It's just because you don't understand margin. So it's important that you understand. That's why I'm explaining, taking time to explain all these basics properly. Don't come and text me and tag me on Twitter and say, at the trade I put $1,000 at the trade and say no money, but I get money. The people steal my money. No, this is what it means, right? So you're going to normally see no money when you're trading beyond the margin requirement or the margin, you've depleted your margin, right? So I hope the aspect of margin is perfectly explained. Guys, let me know if the aspect of margin is perfectly explained. Okay, now that the aspect of margin is explained, let's go on to balance. Balance is pretty straightforward. What is balance? Balance is the capital you started with. So balance is your $1,000, right? Your balance is your $1,000. Balance is straightforward. I hope everybody understand balance now. I can move on to, so we've explained leverage, we've explained margin. Balance is the capital you started with. Let's go on to equity. Pretty straightforward as well. What is equity? Equity is basically your balance plus or minus your running profit or loss. Equity, right? Equity, as I've mentioned, is your balance plus, so equity equals your balance plus trading profit or loss, right? Your running profit or loss. So if you have, what did I do? I said balance. what did I do? Equity. Yes, equity equals your balance plus or minus profit or loss. So let's say you have a trading account of 1,000, right? Like the $1,000 that we wrote there. And then you have a running trade. It's running. Running means that the trade is active of, let's say, positive 200, right? Dollars. Then your balance is still going to be 1,000, but your equity is going to be showing 1,200 because you have what? $200 running. Your equity is going to show what? 1,200. But let's say you have what? The same $1,000 capital, which is your balance, and then you have negative $200 running as loss, right? Guess what? Your equity is going to show what? 800, right? Your equity is going to show 800. Do we understand the aspect of the balance, the equity? Do we understand the aspect of the equity? Let me know, guys, if you understand equity. Yes, so you're going to see in that section equity, this balance, this is pretty straightforward, right? Pretty straightforward. Somebody say, take it again. I'm saying that your balance is the money you put in your trading account. Equity is plus or minus your running trade. If you have a running trade, then your balance is 1,000, and then your running trade is, let's say, $200 profit. Then you're going to see in your trading account that the balance is still 1,000, but something that is labeled as equity, it will be 1,200. Don't get confused because the equity is balance plus or minus your profit or loss. And I give another example that if your balance is 1,000 and then you have a negative $200 running, which means that you're in a loss, then instead of seeing balance 1,000, equity 1,000, no, you're going to see balance 1,000, equity 800, right? I think somebody is trying to explain it. Equity simply means your balance plus or your loss or profit. Good. It's as simple as that, right? And then the last one is the free margin, right? The free margin. In fact, if you understand margin, it shouldn't be hard for you to understand free margin. It's a simple mathematical way, right? I'll use the example that I use here, right, to explain margin, free margin. So remember when I said what? If you place one lot, let's say the broker just put $300 on the side. If they put $300 on the side, then how much is left with your 1,000? 1,000 minus 300 is what? Guys, 1,000 minus 300, what is it? 700. 700 is your free margin. As simple as that. And if you place another $300 trade again, then how much will be left in your account? If you place another trade that requires 300, 400, that 400 is your free margin. So free margin is how much is taken away after you place a trade. The one that is remaining. It's as simple as that. I hope now you guys understand leverage, margin, balance, equity, free margin. As simple as ABC. Now, if you understand these basics, right, guys, I can promise you that you are halfway through understanding how trading works. These are the straightforward, basic beginner logics that you need. I don't complicate beginner sessions at all. I go straight to the point, hitting the nail on the head. I see Freeman here. Freeman is one of my assistants. And yeah, he basically handles the people in the advanced sessions, a place that eventually some of the serious ones here will join. So many trades, who trade the forex market don't know what margin. Yeah. I mean, I just said it here already. So many traders don't know what it is, but I've explained it to you. So now you guys understand it. Now that I've explained it, the thing with me is that I even explained the thing before I get into the slide. So when I get into the slide, we've already explained everything. So leverage, you can see here that we've explained it. Everybody understand leverage. Somebody say no. And then margin, we've explained margin. What's the name? Balance, we've explained balance already. Equity will explain. So, it's very easy. Like I don't really like to follow the slides because I know that I can explain for you guys to understand. So now that you guys have understood balance, equity margin, and everything else, the next important one is for you to understand the pips. Remember that I mentioned pip, right? I mentioned pip, right? And I mentioned pip. And I mentioned that pip, we're going to talk about pip, right? Um, Now we are on pip. We'll talk about pip and lot size in a minute. Let's come here briefly. Yeah, here, pip. So the slide says, well, don't even think about trading until you comfortably understand pip value calculating and profit and loss. So pip is just a unit of measurement, right? Pip is just, it's not any crazy thing. Pips is just a unit of measurement, right? Think about it this way. Well, lot is literally the unit of measurement, but pip is the translation, right? Lot is like you go to the market and then you have the market woman putting gari in that olonka and then say, okay, me fele olonka no bakwa. Olonka is like those gallons that or those tins that they put all this gari inside. They put it in the tin and they tell you that when I fill up the tin, is equivalent to 1,000 naira. When I fill up two things, it's equivalent to 3,000 naira, whatever it is, right? That's in trading what we call lot size, right? You're going to understand it. But pip is, I'll use this part to explain the pip, right? In trading on our platforms, you're going to see that what the exchange rates are displayed in numeracies, right? You're going to see like 1.63704 and you're actually plenty numbers. What does it mean? Don't let it get confusing. Don't get it twisted. It's very simple. I'll tell you one thing and one thing for straight. You're going to see that most of our currency pairs have 5 decimal places. So let's say you're seeing GBP, USD, right? GBP USD, and then you're seeing that what 1.63708. The last, you remember that this is what 5 decimal places. After the decimal is what 1, 2, 3, 4, 5. That's why we say it's 5 decimal place. Some people, I just said 5 decimal place. They are wondering what is decimal place, Charlie. Some people them are own be serious. Not sure say class 2 save they enter, but it's not your fault if you did not enter class 2 here. But this is what 5 decimal place means. 1, 2, 3, 4, 5, right? And in trading, you want to forget about this one here. You want to forget about this one, right? The fifth decimal place is this number right here. Forget about it. That's what we call the pipette. That's what we call the pipette, right? Forget about it, right? You don't want to worry your head about it. Like I said, don't just worry your head about it. But focus on the fourth decimal place. The fourth one is this one. I hope I don't have to stress showing you the fourth one. Do I have to literally stress showing you the fourth one? Focus on the fourth one. Do you get me? The fourth one is what? 1, 2, 3, 4. That is what we call the pip, right? Now, how does it mean when we call it a pip? How does it mean? Okay, okay, Kojo, yeah, the fourth one is called a pip, but what else, right? Now think about it this way. 1 point, right? 1.6370. And we are saying this zero here represent the pip. And remember, this can be in representation of what? GBP USD. Remember that what? These are values that go up or go down because the market goes either upwards or goes what? Either what? Downwards, right? So if this one and then the market is going up, remember that the value changes from the fourth decimal place, right? The value changes from the fourth decimal place. So if it's going up by, let's say, just one value, then what is going to be what? 1 point what? 6371. Do you agree with me? True or false? And if it is going down by another one value, is going to be what? 1 point what? 6369. Do you agree with me? So you see that in both cases, one either increased by one. So that one that it changed to is called pip. But because it is only one, we call it what? One pip. One pip movement. So 1.6370 to 1.6371 is one pip movement. One pip movement. One. The same way, 1.6370 to 1.6369 is one pip movement. One. Don't get it twisted. If this one moves from 1.6370 to 1.6375, how many pip movements, guys? How many pip movements is this one? How many pip movements is this? 500%. The same way, if this one move 1.6370 to 1.63, let me test you. 1.6300. How many pip movement? Muna ma bon. Muna ma bon. O premos 10. Ujira na 10. 10. Negative 100. Negative. It's 70. 70. 70. It's 70 pip movement. Don't go and disgrace me on Twitter. Say, who taught you beginner session? Say, Kojo. No, be me. Because I teach you the right thing. It's 70 pip movement. 70. So you just understand the decimal. If you don't know it, just use your calculator. Take your calculator and just punch it. Don't use your head. No, say the head there, no be we all we get them. So don't stress yourself. But basically the logic is clear. That decimal movement is what we consider as the pip movement. I think this part is clear. Are we on the same page, guys? Is it making sense? Are we all good? The pip definition makes sense, absolute sense. We can move on from here. Yeah, I think it makes sense. So now you guys know what we mean by pip. Don't get confused by pip again in trading, right? Now that we understand pip, we can move on to another important one. We can move on to another important part. Yes, and that important part is what? Lot size, right? So I have this simple table here to illustrate lots. I already explained lots that what? 100,000 is equivalent to what? One lot, right? But in trading, you're not gonna put 100,000, 100, you're gonna put just one. But once you put one lot on your mobile phone, remember that it means what? 100,000. Now there's what? That is a standard lot. Remember, it's called what? Standard. Standard lot is what? The 100,000, which is what you've seen here. 100,000 standard lot. Standard is standard 100,000, right? Then we have the mini lot, which is what? If one lot is equivalent to 100,000, it's mathematical, right? Proportion. Then 0.1 is equal to what? 10,000. Then 0.01 is equal to 1,000 units, right? But every lot you put, there is an equivalent value in pips. Remember, we just finished learning pips. So we just finished learning about the pips. I hope you guys remember we just finished learning about the pips. Don't forget about that one. So one lot is equivalent to what? $10 per pip movement. You remember that when we did the pip, it was what? 1.6070 or something, right? And then we say what? If it moves from 1.60 to 70 to 1.6071, then it's one pip. So if you traded one lot and this one moved from 6070 to 6071, then you've made what? $10 already. You've made $10. That's how serious trading is. And that one pip, right? You don't even see the movement on the market. One pip is like, eh. Like I'm saying my hands is like this, and I do something like that. I say, can you check the space between my hands? Is it, Kojo, but you did not move? Yes, I did not move my hands, but that's one pips in the market. It does not have to move before, because if it moves, for you to see significant move in the market, you're seeing a move like this, a move like this, a move like this. And that's like, even this one that you're seeing there, probably like 20 pips, right? So do this math for me. If you place one lot and movement from here to here is making you $10, then if you place the same one lot and the market move from 1.6070 to 1.6080, right? And we place one lot, how much money would we make? How much money would we make? How much money would we make? You place one lot. Some people say 100, some people say 1,000. Which one is it? It's 100. Good. It's 100. It's 100. The correct answer is 100. Why? Because one lot is equivalent to $10 per pip. And from here to here, the market move what? 10 pips. So you multiply what? Your $10 per pip by the 10 pips, because one lot is equivalent to a $10 per pip. Then you get 100. It's as simple as that. I'll take another example for those who missed it to follow. If we moved from, let me do the most complicated one. Let me see the most serious and smart people here as well, right? Let's test our brains. Let's say 1 point what? 6,125. Yes. Now let me see those who are smart. And you place one lot. One lot. How much are you going to make? Let's see the fast fingers. 550. You are going to make 550. Those who are throwing their numbers around, go back to primary school, because the difference between 6070 and 6125 is what? 55 pips. 55 pips. So if you put one lot, which is equivalent to $10 per pip, times 55, then what do you get? You get 550, right? I hope that is clear. We're not going to waste much time. If you didn't get it, you get to watch the recording and then it will make sense to you. So yeah, I hope it makes sense. It makes sense like that. But yeah, that's the real meaning of PIP and all of those things, right? It's pretty simple. So this is basically me showing you some real life chart works about the trade. You can see what open positions basically for a buy, stop loss beneath, take profit above, and all of that. And then this one is also for what? A sell, stop loss beneath, take profit above, right? And then MetaTrader, which is the platform that I asked you guys to download. This is the PC version, right? This is probably where I just bring my tablet and then see if we can do. Now we've got to the serious part, right? Now we are done with the basics. So now we are getting to what? The real part of trading. And getting to the real part means that you must understand what candle is and all of those things. But we cannot obviously do that now. I told you guys that trading, the knowledge is enormous, it's vast. But up to this point, you guys understand what trading is all about, the basics, the rudiments, what you need to understand about trading. You guys understand it all now, right? What I wanted to do was to see if I can just uh run you guys through the basics of the MT5, right? Let me just see if I can do that now. Okay. So what can you see, guys? Can you still see? Let me know if you guys can still see. I just had to log in with my tablet here. See. Yes, you guys can see. Yes, this is from my tablet, right? Now, if I turn it this way, then it's going to be like from the mobile phone. This is how you're going to see your chart mostly on your mobile phone. So you see here, the chart is here. You're going to see what the quotes, right? On your mobile phone, when you download the MetaTrader 5, you're going to see this. All of these ones are foreign instruments. We don't normally trade them. So you can click here on the edit button at the top there, right? The edit buttons at the very top, and then you can just select all of this one here, right? And then delete them. We don't really need them, right? You just delete them. Now, um, I'm going to show you the most active pairs to trade, but eventually you can just come to the Forex section here, as you can see, right? Forex, and then click on the most relevant ones. I'll send you probably a snapshot of the relevant ones to trade in the group, right? So if you're here in the group, you can start reporting, let's say GBP, USD. You search, you're supposed to see it. Okay, I think it was here already, so that's why it didn't come. I was supposed to just delete all of this. Yeah, so GBP is here already. So let's go to GBP add is there already. So you just press on the plus. GBP CHF is there. GBP GPY is here already, right? So once you finish doing all of that, you're going to see that the instruments that are added are there. You see, you can go on and add a lot, right? Please rotate your tablet for better view. Okay, I rotate it like this. I think you guys are getting better view. I just wanted to show you how it shows on the phone. But yeah, hopefully you guys catch the same glimpse. It's the same thing, whether I do it on a landscape or a portrait format, right? So on the left side, you're going to see your instrument. And any instrument you click on, the chart will show. You can see the chart showing right there. Any instrument you click on, the chart will show, right? And you can see that when I tap on this, because I'm using a tablet, it shows this round thing here. This round thing here is in trading what we call time frames, right? And what does time frame basically mean? Time frame is representing how you want to see these lines moving here. You see these lines that are moving up here, we call it the candles, right? Now, these lines that you're seeing here, they all move one by one. What do I mean by move one by one? Let me change it to the 1 minute, then you're going to get a logic. So every minute as it passes, oh wait, just share the screen again. Every minute as the time passes, a new candle is going to be forming, right? You see the current one that is forming here? I think you guys see it, right? The current one that is forming here. Every minute as the 1 minute passes, it's just going to continuously be moving, right? And then when then 1 minute ends, you see another one came. You see that another one came. So on and on like that. When the next minute comes, I'm just going to leave it here. Let's observe the last 1 minute again before I move on. Are you guys with me? Is it making sense? So let's observe, let's see what happens. This is the 1 minute, remember. So every minute, new candle is going to open, right? Let's wait and see if the new one opens in the next 1 minute. I'm sure it's left with some few seconds. So you see another one came. Yeah, so that's just how it is. 24/7 around the clock, this thing keeps opening every minute, every minute, every minute, every minute. 24 second around, I mean 24 minutes around the clock is just moving like that, right? 24 hours, I wanted to say like that, don't get me wrong. So some traders can sit, guys, no violence in the group. I think it's about time for me to just mute it for now. Some traders can prefer to sit by their chart and be trading in 1 minute, even though it's not the most ideal time frame to be trading. But what I wanted to explain why we came to the 1 minute is just so you understand that when we talk about time frame, it moves per the time in which you are watching. So if I come towards the 5 minute time frame, it means that every 5 minutes is when a new candle will appear. Does it make sense? Let me open the chart and see if it makes sense. Let me open the chart and see if does it make sense with what I just said? That once I've changed the time frame to 5 minutes, yes. The same way, if I change the time frame to 15 minutes, that means every 15 minutes a new one will appear. Does it make sense? Yes, I hope it does so. And then if I change to 30-minute time frame, it means that every 30 minutes one will appear. Every 30 minutes one will appear. The same way when I change it to 1 hour, it means that every 1 hour one will appear. Every 1 hour. And then when I change it to 4 hours, every 4 hour one will appear. The same way when I change it to daily, every single day. So you are at liberty to watch the market in the time frame that you want, right? You are at liberty to watch the market in any time frame that you want. Nobody holds you. Nobody will hold a cane to you and say, hey, why are you watching the market in 2 minutes? Why? You can watch it in any time you want. But hopefully, you're watching it in a time frame that makes sense according to your strategy. That's the most important. According to your strategy. You're watching the time frame according to you. Yeah, 1 year is there. You can even watch the market in monthly, right? This is monthly, right? And then you can watch it in weekly. There's 1 year, but I don't have 1 year on MT4 or MT5. But when you are watching Trading View, we can watch 1 year, we can even watch 10 years, right? I'll introduce you guys to Trading View. This is just MetaTrader 4 this is MetaTrader 5 actually. For traders, MetaTrader 5 is our execution platform. We come here to buy or sell, but mostly we do our technical analysis on Trading View, and the chart is the same. Just that Trading View has a lot more functionality, a lot more analytical diagrams, and analytical indicators, and the chart is very malleable, and it has a risk to reward tool. It has just so many tools that makes analysis easier than MetaTrader 5. That's why we use MetaTrader 5 to just buy or sell, but we use TradingView to do our analysis. You see here, when I click here like this, you can see sell or buy. Hey, if I had made a mistake to click it right now, it would have executed. But anyway, I put a lot size to 0.01, so it will not hurt my account. 0.01, remember guys, is what? 1 cent per pip, and it doesn't hurt anything. Because I'm logged into one of my account, by the way. So the account that I'm logged in now is not a demo account. It's a real account. It's my Xness. You can see the 100,000. Yesterday, I just made some quick $1,000 I went out with my family, right? And I didn't want to spend the cash on me. But I had funded this that, okay, this year, this is the money I want to play with for the first quarter of the year. And then we had breakfast. I went out with my father-in-law and my mother-in-law. You saw them in my reel if you watched. So I just watched the market. I saw gold. And I just put some quick lots on it. You can see here. And then I quickly made $1,000. And then you can see in the transaction history, I withdraw the $1,000 and left it. I'm like, I don't rush this. I'll come back and trade it properly because we're in a town. I didn't do any analysis. I picked my phone. I just watched them. I said, okay, buy. And I bought. And later I put it in the group, and then they made a lot of money. But that's how flexible and insane trading can be, right? So you can see these other ones on the bottom here, you don't necessarily need them for trading purposes, but it's good to just go through if you want to read about news, right? There's a lot of fundamental news here. Mail, I don't know who uses this mail The charts, again, I don't really know who uses it. Then the account, if you want to see account details, you're going to see it here. You can see Kojo Forex, MT5 real, hedge, 100,000, blah, 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 and so on and so forth, right? And I think that I showed you with respect to the charts. So at the top there, like I said, if you click it, buy or sell, it will execute right now. I'm not going to use my account to do that demonstration, but hopefully it makes sense to you. But in our next session, when we get into, let's say, the proper technical analysis, I'll probably just use a demo account to demonstrate the buy and sell. I don't have any demo on this one. Other than that, I would have just used it to illustrate an example of how to buy and then set your stop loss and all of that. Let me see. If I don't do it today, we can just do it in another session. But hopefully you guys understand, right? Now, in fact, let me just explain briefly the candles before we move on to anything, right? Now you're seeing the candles, right? You're seeing that if I trace this one here, it's tracing it to a number on the right side, right? In fact, let me put it at the top here. And then if I trace this one also, if I trace from down here also, it traces it onto this number, right? You can see that. Are you guys with me? So remember, this is what GBP card. Remember that what this one means is that what? At this particular point in the market dropped from this top here all the way down here, right? And this one also means that what at this particular point in the market moved from the down here all the way to the top here. So if you were here and then you sold on the market, you'd have made profit up to where? Up to here, if you so wished, right? And let's say you put a lot size of 1, right? Let's do a basic math. Let's choose this one as the entry value. Let's say 1.8030. You guys do the math for me. 1.8030 minus 1.7832. What do we have? 8030 minus 7832. What do we have? 198. Good. So multiply 1 lot, which is equivalent to $10. So multiply $10 by 198. What do you have? $10 by 198, what do you have? 1,980. Good. Which means that if you had entered this trade here for a sell and it dropped from the top here to the down here, you just made $1,980. That's just what it means in trading, right? The same way, if you had bought from the down here and it went up here, right? Let's do the math. Let's do the math here. 7832 minus 7940. 7832 minus 7940. What do we have? I know you're going to get negative, but ignore the negative. What do you have? 108. Multiply 10 by 108. Multiply 10 by 108. What is that? 1,080. So if you had bought one lot here and it moved here, you just made $1,080. That's just how trading is. But the real difficulty comes from how would I have known to buy here or how would I have known to sell here? But that's just what trading is. We don't do anything difficult. We just watch the market, analyze with our eyes. Okay, GBP USD is going to drop and I sell. Or GBP USD is going to go up, then I buy. but it's not as easy as buy, sell, buy. The real difficulty is how will I know when to buy? But once you know when to buy or when to sell, that is it. So you see some of the tweets that I make, that if a trader achieves profitability, then they are the greatest of all time. They are invisible and all of that. That is the attribution I'm making, because once you master the craft, and then you are just subjected to telling that, okay, will this go up or will this go down? And you are just in your room, okay, up, buy, okay, down, sell. Then you make money. That's all, right? Now, what I wanted to show you is that in trading terminologies, right, the blue candles you're seeing, for me, it's representing the price is going up. The price is on the one that is on the right side, which is the scales, right? The blue candle, we call them the bull candles. So you're going to hear us talking about bullish move, bull, bullish, bull. It's the same. Bull, bull, right? And then the black candle, which is representing that the price is going down, we call them the bearish candles, right? So bull and bear. Bull for up, bear for down, right? Bull for up, bear for down, right? And that name of that line you're seeing, we call it what? The candles, right? Bull for buy, bear for sell, indeed, right? So that lines you're seeing there, we call them the candles, right? So guys, I will not bore your mind too much. We'll end today's session here. We've gone through the platform, you understand it, you're familiar with it, right? Let it just sink in your mind a little bit. I'll send you the video recording, ponder over it, watch it again. Those of you that are confused, verify your trading account. If you have the money, put some $50 in there, $10, $100, $1,000, whatever you can afford, right? In our next session, we're going to go into technical analysis. We're going to go into trading view, and we're going to go into me teaching you the real technical analysis, how to analyze. We're going to talk about my sniper entry strategy, chart patterns, right? I'm going to show you some key technical chart patterns you can use to tell. We're going to learn about candlestick analogy and candlestick anatomy. We're going to learn about convergence, divergence, just basically all the crazy technical analysis that confuses you when you watch my YouTube. You're going to teach them here. And hopefully it will start making sense. You can just watch the market and do your own analysis and, trade by yourself. So if you guys enjoyed it, let me know. Let me know in the group chat. If you enjoyed this, you learned a lot, it's impactful, right? So you know what I want you guys to do? Take a screenshot, post it on Twitter, whatever you learn, tag me, I'll repost it, tag me, let people know that it was a fruitful session, it was amazing, it was enjoyable, and I really appreciate all of you for taking your time to come. And this was actually a very entertaining session. I promise you, it has been more than, like I said, 4 years, 5 years that I personally took time to teach beginner session like this online, but I really enjoyed every bit of it. And I hope to, continue and then teach you guys even some more to become proficient traders, and then have your 2025 going in an amazing way, in the best way, and a gift that I can just give you guys. Not for me to talk so much long. I'll leave you guys here. Thank you so much for joining the session, and I'll see you in the next one. Obviously, I'm going to announce the next one in the same group, so stay tuned. Keep yourself logged in the group and don't miss the announcements. I'll definitely give that announcement so many hours prior so that you get to participate when you see it. Thanks for your time, and I'll see you guys next, the next one. Peace.